remember, for seniors, you guys are going to be responsible for the Chapter 12 assignments. No Chapter 12 test unless you have to take a final exam in this class, in which case the Chapter 12 test would be your final exam. Juniors, you guys are taking the Chapter 12 test, period. So you'll do all the Chapter 12 assignments, and then we'll be taking a Chapter 5 test also. The idea here, remember in this overarching unit in this semester, we've been talking about like the idea of running a corporation as opposed to a proprietorship, like a small single owner business. In chapters 12 and 13, we're going to be talking about like topics concerning like paying your employees. So there'll be some tax considerations in there. There'll be payrolls. There'll be, tracking hours and time cards and all that kind of stuff. So that's what we're going to be looking at here in the next couple of chapters, is like talked about how to, like, as a corporation, how we buy things and how we sell things and how we account for that. And now we're going to be talking about paying our employees and tracking our employees' hours and the taxes involved and all that. So just kind of start buzzing through this. So we're going to do 12.1 and 12.2 today. So in 12.1, we're going to be primarily concerned with calculating employee earnings. So typically there's two different ways you can pay your employees. You can pay them like an hourly wage, or you can pay them a fixed salary. So an hourly wage is based on how many hours you work. A salary is like, we pay you this amount of money per year to do this job, and we've divided that money over, however many pay periods, whether it's weekly or bi-weekly or monthly or whatever. Or you might work with a combination of those. You might work an hourly wage and also get a commission, or you might work a salary and also get a commission based on the amount of sales you generate or some other metric. The total amount, though, paid by a business for an employee's work is called the total earnings. So that would include an hourly wage or a salary and or a commission. Those total earnings are sometimes referred to as gross pay or gross wages or gross earnings. So again, total and gross, you could use interchangeably. They're synonyms. The pay period is the number of days or weeks of work covered by an employee's paycheck. So again, you could have weekly or bi-weekly or semi-monthly or monthly, or maybe some other even weird pay structure. Like if you're a professional athlete, I think you get paid via game checks. So your salary is divided up into the total number of games that season. You're paid per game check or whatever, paid per game. The total amount earned by all employees for a pay period is called the payroll. The accounting staff position that compiles and computes payroll data and prepares, journalizes, and posts payroll transactions is called the payroll clerk. So that's going to be kind of the imaginary job we're going to learn how to do here in the next couple of chapters. We use a time clock to record the dates and times of employees' arrival and departure if you're working an hourly wage. If you have a salary job, there is no time clock per se. So an example of what a time clock document might look like. So this would be like a time card for John P. Butler. You notice that on the left-hand side, you have some dates and then the time in and out. So it looks like this person has an hour-ish lunch break every day, so they clock out for their lunch break and then clock back in afterwards. So it looked like we worked about 4 hours in the morning and 4 hours in the afternoons for a total of 8 hours during the day. Everybody's okay with this idea? A typical full-time day is considered 8 hours. If you work beyond 8 hours, that's considered overtime. Or perhaps if you have to work on a weekend or a holiday, those hours would be also earn overtime pay in most situations. So if we look at old John Butler here, it looks like he had worked an extra 2.5 hours in the evening one night, gave him 10.5 hours for the day, so he had 2.5 hours overtime. And then looks like he had to work a Saturday for a little bit, and those hours counted as overtime. Everybody's okay with that? Notice that if we add up the hours or the regular hours worked, we don't see the 88 that's represented here because of the break. We're missing everything that he worked from the 4th to the 11th is missing. That's why this column doesn't add up to be 88. Everybody's okay with how to read a time card here? Fairly straightforward, right? So here's just another alternate time card. It's doing the same thing. Everybody's okay? All right. So to calculate the hourly employee total earnings, you take the hours that they've worked and multiply it by the hourly rate to get their regular earnings. And then you calculate the overtime. The overtime rate is typically 1.5 times your regular rate. Depending on your job in collective bargainings, like there may be multiple overtime rates. Like if you're a UAW employee, I think you get different levels of time and a half depending on if it's a holiday or a weekend or what kind of holiday, or if it's standard overtime or bonus overtime. And there's a bunch of different criteria that was all collectively bargained by your union. Like I think if you have to work a major holiday, it's like triple time or something. Anyway, so you calculate the overtime rate, and then that'll allow you to calculate overtime earnings, and then you add everything up to get the total earnings for that employee for the given pay period. All right. So payroll, again, total of all money earned by employees for a pay period. The 3 methods used to record employee arrival and departure times. So again, you could like swipe a name badge. You could key in personal identification numbers, or press a finger to biometric pad. All these things are ways to record your coming and going at an hourly wage job. Usually that's right. The clock is right there where the employees enter and leave, so easy to remember. So the Fair Labor Standards requires most businesses involved to pay employees at least 1.5 times the normal hourly rate for hours worked in excess of 40 hours per week. So again, that could vary, could be more, depending on what's been collectively bargained, if you're in a union, or it could be just your employer values your time more, or had trouble finding workers to fill overtime hours, so they're going to offer more than 1.5 times because they're trying to incentivize people to work those overtime hours. And then the example in the textbook would have been this company 3 Green. And again, they pay 1.5 times normal hourly rate for hours worked if they're more than 8 hours per day or exceed 40 hours per week, which again is fairly standard in most situations. Let's go and take a look at the work together for this one. Again, that's the way you guys like to do it, right? You take a work together break in between the lectures, or do we go straight through? Oh, okay. Well, let's go straight through then. As long as you're good with it, I'm good with it. Anything we want to do. So we're done with that one. Oh, I don't have the second one up yet anymore. All right. So how many of us have had a job where you collect a payroll check, like a check from an employer? Right. Okay, one of us. Kaylin, when you get your check, do you get paid all the money that you earned? No. Why is there money missing? Taxes, Medicare, Social Security. All those are withholdings that need to are collected typically by your employer beforehand and paid to the government. Now, if you are self-employed, you have to do that collection yourself. So you have to track how much you've earned and then pay those payroll or pay those federal tax withholdings and Medicare and Social Security for yourself. So that's what we're going to be looking at in section 2. So taxes based on the payroll of a business are called payroll taxes. So as an employee, you can designate how you want to pay your taxes, like the amount that you want to pay. That's called a withholding. So a deduction from the total earnings of each person legally supported by a taxpayer, including the employee, is called a withholding allowance. So as an employee, if you're a single person, you can take a 0 withholding or a 1 withholding, depending on if you want to pay more tax or less tax up front. The possibility of getting a bigger income or bigger tax return or possibly owing. Or if you're married, you can claim yourself and your spouse. Or if you have children, you can claim your children. All of these things are examples of the withholding allowance. Any amount withheld from an employee's gross earnings is called a payroll deduction. So that would include federal taxes, Medicare, Medicaid, Social Security. So an example of a tax document. So this is the W-4 form for John Butler. On it, you can see that it has line 5, has the total number of allowance you are claiming. He's claiming 4. So it says he's married and he's claiming 4 dependents or whatever. So that's probably him and his wife and his 2 children is probably what he's doing here. But that's the thing that you're looking at. And he's electing to withhold 0 additional dollars from his paycheck, which is pretty standard. Nobody usually likes to overpay the government. So blah, 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 blah. So normal stuff that you all, I'm sure, are shocked to see the name and address here. So what you're looking at is the withholding schedule. So what this is for a single person and then the number of dependents. So if you claim a 0 and you make, say, $1,100, you find $1,100 to $1,120, you'd pay $120 would be withheld from your paycheck. If you claim 1 dependent, it would be $97. If you claim, and so on, you just read across the column. So you look at how much you earned in that pay period, and then you look at the number of, or the allowances, and they'll tell you the amount of tax you have to withhold from the paycheck. Very straightforward, very easy. There's a separate chart for married. So remember John Butler there, he earned between $1,460 and $1,480 and had 4 allowances. So he should have $29 withheld from his paycheck. So there's a separate schedule for single and a separate schedule for married. And then you just track across, right? Very easy to read. A federal tax paid for old age, survivors, and disability insurance is called Social Security tax. A federal tax paid for hospital insurance is called Medicare tax. The gross earnings year to date for an employee is called accumulated earnings. The maximum amount of earnings on which a tax is calculated is called a tax base. A retirement savings plan approved by the Internal Revenue Service that provides individuals with a tax benefit is called a qualified retirement plan. An example of that could be a 401k, which is sponsored by an employer. Another would be an individual retirement account or an IRA that is sponsored by the individual. And then a special type of IRA is called a Roth IRA. The difference between a standard or traditional IRA and a Roth IRA is how the taxes are paid on them. So the traditional IRA, you don't pay tax until you pull the money from the account. In the Roth IRA, you pay the tax as it goes in, and then you owe nothing when you remove the money from the account, assuming that you've waited the designated period of time, right? Like there's limits as to when you can take that money out. Okay. So the information you need to determine their federal withholdings comes from their W-4s. The marital status and number of allowances determine the federal income or the federal income tax withholding. And both employer and employee pay into Social Security and Medicare tax. And the difference for these three retirement plans is how and when the payroll tax, or when you're paying taxes on these contributions. So only the 401k and traditional IRA have payroll taxes or are deducted before payroll tax is calculated. So that allows you to reduce your today tax burden by saving. Not the case with a Roth IRA. And then again, as we said, the 401k and traditional IRAs, you pay the tax after you pull the monies out. In the Roth IRA, you pay the tax before you put the money in, and you pay no tax when you pull the money out. All right. So that's the gist there. You guys want to pull up your Cengage and we can blast through a couple of these work togethers. Sound good to you guys? Mm-hmm. Yeah, why not? Reset. Okay. So, do you guys need me to give you a minute while you pull up your Cengage? We're going to work on the 12-1 work together here first, and we'll do the 12-2 work together second. We ready to rock and roll, or do you need a minute? We're good? Okay. It says the October 15 time card for Alice R. Webster and the time card for other employees are provided. Calculate the regular, overtime, and total hours worked by Miss Webster. Any hours over 8 hours per day or 40 hours per week are considered overtime. Each work week begins on Monday. Record the total hours on the time card. Record hours to the nearest quarter hour. And then as always, if there's no value to be entered, leave it blank. All right. So if I look at Monday the 1st, looks like we worked 4 hours and 3 minutes in the morning. And then we worked 4 hours and 8 minutes in the afternoon. I think that gives us 8 total. Let's enter that and check. Okay. Okay. Next one, we worked 3:52 in the morning, and then 4. Sorry, what? 3:56? Yes. In the afternoon. It's about 8 again. So it's one of these that close enough is good enough kind of things. That's about it. Yeah, so keep on rocking through this. Yep. So we have 4, and then 4. That's 8. And then we have an initial 2.5 in the evening. And we have a 4. Oh, is it 3? And oh, yes, certainly is. So we did 4 in the morning and then 4 in the evening. We did 4 and then another 4. We did a 4. Oh, and then we did a 5-er up here in the evening. So that's going to give us 1 hour of overtime. And we did a 4 in the morning and a 4. We did another 4 and a 4. Ooh, we did a 5 and then a 3. That's still 8. And this is a Saturday, right? So if we count, we did 8, 16, 32, 40, and then 8, 16, 32, 40. So that's 240 hours, and then we're on to Saturday. So this is an overtime situation. Looks like 3 hours of overtime there.
Can we round it down?
I think you're rounding to the, it says record the, it says round hours to the nearest quarter hour. But I think it has to be like each separate time chunk. You can't add up the total minutes from the first time chunk to the second time chunk and call that a quarter of an hour. Like when you clock in and out, it's that segment that's rounded. Oops. And then let's check those. That all checks out. And then we just add up. So 8, 16, 24, 32, 48, or 40, 48, 56, 64, 72, 88, and then 7.5. And that'll do it. Is everybody okay there? All right. We'll grade this step and go on to the next piece. Here it says the time card for Alice R. Webster and other employees are provided. Enter the regular and overtime hours for Miss Webster in the earnings schedule. For each employee, calculate the amount of regular, overtime, and total earnings. Overtime hours pay at 1.5 the regular rate. Round dollar amounts to the nearest cent. If the answer is 0, enter 0 instead of leaving the cell blank. Okay. So we had for Alice here, let's grab our calculator. It says we worked 80 regular hours at a rate of $9 per hour. So $7.20. And then it says we worked 5 hours at overtime.
67.
Yep. So we're paying that at 1.5 times 9. Oops. Except I didn't press 5. I pressed 2. So 67.5. And if I add that up across 787.5, and then we'll continue just kind of doing the same thing, right? Oops. So 80 times 12.5, and then 3 times 12.5 times 1.5.
Well, we're moving along.
682.50. And then employee number 4, that was our girl Alice A. Webster, who had 88 hours of regular time and 7.5 hours of overtime. And she earns at $11 an hour. Well, Alice here is putting in the work, you know. So 968 and then 123.75. 968, 123.75. And then I add those up. So that's 1091.75. Is everybody cool as to how we go about doing this? Should be pretty straightforward there, I think, right? Should we ready to, what's up, Josh?
What's up, Doc?
You need something?
Stop by.
Oh. Okay. You got a payroll, right?
That's what we have to do.
All right. You guys ready to do? I blame Jack. All right, so in section 2, we're going to be doing the federal withholdings and Social Security and Medicaid. So it says, determine the federal income tax that must be withheld for each employee. Use the tax withholding table given in question assets and calculate the amount of Social Security tax and Medicare tax that must be withheld from each employee. Use a Social Security tax rate of 6.2% and a Medicare tax rate of 1.5%. None of the employees has accumulated earnings greater than the tax base. Round dollar amounts to the nearest cent. Okay. So John Clausen is first. He's married and has 2 withholding. So I'm going to go to the married section and the 2 withholdings. And he earned $1,360. So he's right here. And I scroll over to the 2, so it's a $52 withholding. And then it says the Social Security rate is 6.2%. So 1360 times 0.062. So 8432. And it says the Medicare withholding is 1.45. Oops. So 1360 times 0.0145. So 1972. Everybody okay with how we filled this in? Okay, and then you just rinse and repeat. So 60, 76, 14,
Oh, no, not times. I meant That's times 0.6. Oh, yeah, You know how to do that, right?
Yeah.
You loves that. Well, it's like you're crushing things against you.
9362 and 2190.
Yeah. And then this is all we're doing today, correct?
That's it. Yeah, man. We are Audi 3000 after that.
Finish line.
Just keep putting oil on it. That's what I do with my
6975.
Nah, you don't get to check that, you just give it oil in. It's just thirsty. It's like gas. It's not drinking, it's leaking out. A whole quart on my phone. Yeah, that's bad. But mine drinks it because that's what the 513s do. They love drinking. Like it's like where you have like 8 shit one. No, that's what it is. They all look like.
So that's all she wrote, guys. You guys feel good? Should be pretty easy, right? So, seniors, go ahead and crank through the 2-1 and or 12-1 and 12-2 assignments. Again, work together on your own application.